If you're thinking about buying a new car sometime in the near future and you've wondered if perhaps a novated lease might be a good way to go, then this video is absolutely for you, because in this video, I'm going to share with you a very simple example of what a novated lease is and how it works using a real life example from one of my clients. As a personal finance and investment coach, barely a week goes past at the moment without someone asking me, Phil, are novated leases worth it? And what they're really asking is a question similar to what we've got on the screen here at the moment, whereas is a novated lease actually better than me just paying cash for a car from money in a bank account? Now, I will admit, I used to be very anti-leases because I really don't like debt of any kind. But I will have to say that the numbers right now, especially around electric vehicles, are very compelling. So in this video, I'm going to take you through the numbers so that you can make a decision for yourself. So what we're going to cover in this video, firstly, is what is a novated lease. Then we're going to look at how a novated lease works. We're going to look at the advantages of a novated lease, the things you really need to look out for with a novated lease, and then how to work out if a novated lease is right for you. And then we'll finish off with a very quick summary. So what is a novated lease? Well, a novated lease is simply just a very tax-effective way to purchase a new car in an arrangement made through your employer. So there are three parties involved in a novated lease. Firstly, there is you, the person that wants a nice new car. Then there is a salary packaging company or a financing company. And what they do is they lend you the money for the vehicle, but they package together all of the running costs associated with that vehicle into one nice, neat payment that then gets paid by your employer from your pre-tax salary every single payday. So let's now have a look at how a novated lease works. And the first step in this process is to choose the car you want. Now, this car needs to be either new or a second-hand car that's less than 7 years old, or it could even be your existing vehicle as long as that existing vehicle is less than 7 years old. So the second step in this process is to get a quote from a salary packaging provider. Now, your employer probably already has an arrangement with a salary packaging provider, but if they don't, a quick Google search will find you plenty of options. Now, on the screen, you can see a real life quote from one of my clients. In fact, the client that asked a question earlier in this video. Now, I want to take you through a couple of the key variables here. First one is lease term. How long is this lease going to be for? So we can see here 60 months or 5 years. Most lease payments will be around 3 to 5 years long. Over here we can see the actual base value. How much is the purchase price of the vehicle? $35,440. The actual amount being leased though by the client is $33,718. So when we say lease, it's basically just a fancy loan with tax benefits. And very importantly, you need to know, well, what is the residual value? So the residual value is what is the balloon payment or that payment that I need to make after the 60 months is over in order for me to own the vehicle. So that is going to be how much you're still owing at the end of the lease. Also down here, very important, you can see this is one of the big benefits of a lease, is that all the maintenance and the ongoing costs associated with the vehicle are included in this lease. So we can see here the lease payments, which is this $33,000 broken down into a repayment, is $633 a month. Then we've got $21 on repairs and maintenance, $56 on fuel, or in this case, electricity, tires, $13 a month, comprehensive insurance, $167 a month, CTP, $40.76 a month, a registration CTP, and then fees. So this is the ongoing charges and fees by the salary packaging company at $33. So all of these expenses are packaged into one payment. So this is the first part of a quote. And the second thing that you need to understand with a novated lease is what is the cash flow impact of this lease on my budget? Because even though a novated lease does make it a very tax effective way to own a car, there is still an impact on your cash flow. So here is a second part of the quote I was just sharing with you from my client. What we've got here is the annual expenses, or the expenses as an annual figure, and the expenses as a monthly figure. So I'm going to take you through the annual figure here so that you understand it. Firstly, we've got the finance charges. This is basically the loan repayments on the vehicle. Then we've got the management fee, the document and establishment fee, and then down here are all the running costs that we just looked at with the vehicle. And in total, all these costs are about $11,594 per year. Now, if all of these costs are tax deductible, with which an electric car they are at the moment. If you don't have an electric car, let's just say you've got a petrol, diesel, or hybrid car right now, some of the costs will have to be made from your pre-tax salary so that your employer can avoid the fringe benefits tax. But this car here is an electric car, and therefore all of the costs are tax deductible. And because he's in the 37.5 cent tax bracket, this means a tax saving of around $4,522 a year. So when we say it's tax effective, it's a very tax effective way to own a new car. He's saving himself $4,522 in tax, which means that the annual impact of this vehicle on his salary is $7,072, which is $589 per month. So just understand, he's going to be worse off $589 per month because of this lease, but it would have been a whole lot more had he chosen to buy the vehicle without a novated lease. And the last thing that you want to take note of when it comes to a novated lease is what are the total tax savings, because these are significant, particularly if you're taking on a new vehicle. You can see on the quote here that my client is saving himself $3,222 in GST on his new car. So this is him not having to pay the GST on the purchase of a new vehicle. Now, this is available to anyone using a novated lease, and it's up to a vehicle of $69,600, I think it is. So the actual maximum tax saving is $6,300 odd. So well worth your while taking a novated lease just to save yourself on the GST. But it's not just on the purchase price of the vehicle, you also save yourself the GST on all the running costs associated with that vehicle. And then of course we've got the total tax savings because the payments are made from your pre-tax salary over the course of that loan. So you can see over the course of this vehicle's life, or the 5-year lease, this client is going to save himself $27,628. Now, once you've received the quote from the salary packaging company, you've had a good look through it, you understand the cash flow impact, you've signed on the dotted line, you've now got the vehicle, well, your employer can start making those payments for you from your salary. Now, it's important to understand that there are two types of payments here. Firstly, if you have an electric vehicle, right now under current legislation, all of the expenses related to that vehicle can be paid for from your pre-tax salary. However, if you have a petrol car, a diesel car, or a hybrid vehicle of any kind, then some of your expenses may have to come out of your after-tax salary so that it offsets the fringe benefits tax that your employer may have to make. Now, your employer has to pay fringe benefits tax, which is 47%, on anything that is a perk that they give you over and above your salary. So to offset this, what happens is some of your running costs are actually paid for from your pre-tax salary. They still go to the salary packaging provider, but it's paid for from your pre-tax salary. So it's important that you understand what component is pre-tax and how much is going to be post-tax when you set up your lease. Now, it's also really important before you sign on the dotted line that you understand, well, what happens at the end of the lease? As we mentioned earlier, most leases go from 3 to 5 years. For my client, it was 60 months or 5 years. And at the end of that term, there is a residual or a balloon payment. So this is what's still owing on the vehicle. Most leases do not pay out the entire vehicle. There is always something left over. So in the case of my client, it was around $10,000 that he had left as a residual payment. So what are the options when you get to the end of a lease term? Well, there are 4 options available to you. The first one is if the car is less than 7 years old, you could refinance it, take out a new lease for a new period of time. You could, if you've got cash sitting in the bank, take that cash, pay off the residual of the balloon payment, and then you own the car outright. The third option is that you could trade in the vehicle, upgrade to a new vehicle and a new lease. And then the last payment is that you could just sell the vehicle, pay out the residual, and you're done. So let's quickly summarize the advantages of taking on a novated lease. The first big advantage is that you do not pay GST on the purchase of a new vehicle, which can save you up to $6,334 a year. The next thing to note is that you do not pay GST on the running costs of your vehicle. And if you own an electric vehicle, because there's no fringe benefits tax on electric vehicles right now, this means that the running costs of your vehicle are 100% tax deductible. If you have a hybrid vehicle, a petrol vehicle, or a diesel vehicle, most of your running cost will be tax deductible. And the fifth really big example of having a novated lease, especially if you're not great with budgeting, is that all of the running costs associated with that vehicle are bundled into one payment that is taken out of your pay every payday, so that you don't need to worry about where the money is going to come from to pay the insurance or to pay the registration or to pay the maintenance, because all the money is already sitting there in your salary packaging account. And the last big advantage of having a novated lease is that you haven't had to use cash to buy the car, and that cash can be put to work elsewhere. Maybe it's sitting against your mortgage, or maybe it's used for investing so that your money can start making money. Now, if this video has been helpful so far, can I please encourage you to click the like button, because that really does help my channel and this content reach more families. And please subscribe, because every week I release more videos with practical, no fluff money strategies to help you and your family thrive financially. So please click the like and subscribe. So now that we've had a look at the advantages of a novated lease, let's now have a look at the things we need to look out for. Firstly, a lease, a novated lease, no matter how sophisticated and tax effective it sounds, is still a debt. So it's still money you've pulled forward from tomorrow to pay for something today. And because of that, there are still going to be fees and there's still going to be interest that we need to pay on those leases. So it's important that you understand what those are. The third thing to understand is that technically you do not own the vehicle, the salary packaging company does. So before you go pimping it out with a tow bar and lowered suspension and a spoiler, you need to make sure you've got permission from the salary packaging company first. The fourth one, and this is a really big one, you need to make sure you've got stable employment, because if you lose your job or you change jobs, you are still responsible for the lease payments on that vehicle. Number 5, and this is where I see people go wrong all the time, and this is what I call eyes bigger than your budget. Before we thought about a novated lease, we were quite happy with a $25,000, $30,000 vehicle. But because now there's a novated lease, and because it's tax effective, all of a sudden we're thinking $50,000, $60,000, $70,000. Please don't let that be you. This is still money you've got to pay back at some point. It's still money you're pulling forward from tomorrow's income to pay for something today. It will have an impact on your cash flow. So make sure you're being reasonable with what sort of car you're purchasing. And number 6, we've covered this a couple of times already. If you're getting a petrol, a diesel, or a hybrid vehicle, please understand that there will be a component of the running costs that you need to pay for from your pre-tax salary. So just make sure you know what that component is. And the last thing to note is that at the end of the lease, there will still be a residual or balloon payment to make. So please make sure you've got a plan for how you're going to deal with that. So the big question right now is, well, is a novated lease right for me? And there's a few things you want to consider here. Firstly, are you an employee? You need to be an employee to have a novated lease. Secondly, what tax bracket am I in? Ideally, you'd be earning around $60,000, $70,000 or more for this to be worthwhile. And obviously, the higher your tax brackets, the more effective this is. The third thing to note here is, well, were you going to buy a car anyway? It's silly to get a novated lease for the sake of getting a novated lease. And it's silly to get a novated lease just so you can get a tax deduction. If you are going to buy a new car anyway, then maybe this is the way to do it. The fourth thing to consider is, can your cash flow, so your monthly cash flow, can it support the lease payments without putting strain on your household budget? And the last thing to consider is how stable is your employment. You don't want to find yourself in a position where you're halfway through a 5-year lease and you've just lost your job. So let's finish up with a very quick summary. First thing to note is that a novated lease can provide you with a very tax-effective way to own a car, particularly if it is a new car or an electric vehicle. Number 3, particularly useful if you're not great with budgeting, is that having a novated lease will enable you to bundle all of your expenses into one simple payment that comes out of your pay every month. But please make sure that you understand what are the fees. Make sure you understand the interest. Make sure you understand what you'll be paying pre-tax and post-tax. And please also make sure you understand what the residual or balloon payment will be at the end of that loan period. And number 5, please don't get eyes bigger than your budget. Don't let a novated lease change your buying behavior. If you are planning on buying a $30,000 vehicle before a novated lease, then please buy a $30,000 vehicle with a novated lease. And lastly, make sure you understand the cash flow impact of a novated lease on your household budget. Now, thank you so much for watching this video. I genuinely hope that it's been helpful in your deliberations and working out whether or not a novated lease is right for you and your family. If it has been helpful, please click the like and subscribe. And if you would like a copy of my novated lease checklist, then please check out the description in the link below. And please remember, it's the little financial habits and strategies that you put in place today that can literally make $1 million difference to your future. Take care, and I look forward to seeing you in the next video.